Porsche once seemed unstoppable. The brand was a symbol of success and engineering perfection. For decades, it represented a pinnacle of automotive desire, a safe bet for investors, a dream car for enthusiasts. However, the business landscape can shift with startling speed. In 2025, the company faced a storm it could not avoid. Its financial results painted a grim picture of a company in serious trouble. The numbers were stark and unforgiving, a dramatic reversal of fortune for the storied German automaker. The most shocking figure was the collapse in profits. In 2025, the Porsche Automotive Division's operating profit plummeted by an astounding 98.3%. It fell to a mere 90 million euros, a catastrophic drop from the billions it had earned just a year prior. The company's return on sales, a key measure of profitability, crashed from a healthy 14.5% down to just 0.3%. Such a decline hadn't been seen since the global financial crisis of 2009, the worst performance in over 15 years. Porsche's stock value fell by over 30%, and it was excluded from Germany's prestigious DAX blue chip index. Two primary factors drove this fall. The first, over-reliance on the Chinese market. The second, internal struggles with software development. The contrast between Porsche's performance in China and India could not be more extreme. Hindi, Cheen banam Bharat, Tikha antar. In China, the market that once fueled Porsche's global success has become its biggest liability. Hindi, sabse bada jokhim. Sophisticated local competitors have reshaped the luxury landscape. Hindi, Sthaniya Unnat Pratispardhi. Chinese manufacturers, BYD, Xiaomi, Huawei. On-screen badges, Hindi labels. They're no longer just making cheap cars, they're building premium vehicles. Features, advanced technology, high-quality materials, cutting-edge software. Hindi highlights, advanced tech, premium material, software. This competition targeted Porsche's customers, causing a dramatic sales collapse. Hindi, Lakshit Grahak, Bikrigiri. The numbers from China tell the story. Last year, Porsche delivered 41,138 cars in China, down 26% year-on-year. On-screen, 41,938, 26%. Hindi, Cheen delivery. The situation is dire for the Taycan. It was Porsche's electric answer, but local brands outmaneuvered it. Example, the Xiaomi SU7, a sleek electric sedan, costs less than a quarter of a Taycan. On-screen price bars. Hindi, कीमत एक दफा. For every Taycan sold, Xiaomi moved 74 SU7s. Big 74x visual. Hindi, 74 guna. Meanwhile, India tells a different tale. India is smaller but growing fast. Hindi, Bharat, chota par teji se badhta. In 2020, Porsche India had its best year ever, surpassing four figures, 1,006 cars, up 10% year-on-year. On-screen, 1,006, 110%, Hindi. This shows rising demand from a new generation of wealthy Indian buyers. Preferences differ. EVs are growing, but petrol sports cars remain hugely desirable. Visual, 911 on scenic Indian road. Hindi, Porsche two-door icons, 911, 718. Two-door sales jumped 95% in India, showing a passionate enthusiast base valuing driving pleasure and heritage. On screen, plus 195%, Hindi. That demand gives Porsche a stable foothold as the world shifts to electrification. Visual, Taycan Charge, plus classic 911 drive. Hindi keyline. A major catalyst for Porsche's potential Indian renaissance is a landmark trade deal. The recently negotiated India-EU free trade agreement will fundamentally alter the economics of selling luxury European cars in India. For decades, India has protected its domestic auto industry with some of the highest import tariffs in the world. Right now, any imported car over $40,000 faces a staggering 110% import duty. That tax effectively doubles the retail price, putting Porsche out of reach for most buyers. The new FTA promises to dismantle that tax barrier. Over 5 years, the 110% tariff will be reduced down to just 10%. This reduction applies to a quota of 250,000 vehicles per year. Experts say on-road prices could fall by 20% to 30%. Now, specific Porsche models, starting with the Porsche 911. Current 1.86 crore to 3.51 crore rupees. Projected 1.10 crore to 2.10 crore rupees. Next, Porsche Taycan. Current 1.67 crore to 2.53 crore rupees. Projected 1.10 crore to 1.60 crore rupees. Even best sellers get a lift. Porsche Macan. Current around 96 lakh rupees. Projected 65 lakh to 75 lakh rupees. That price shift lets Porsche compete more directly with other premium SUVs, Mercedes-Benz, BMW, Audi. Section 4. Digging for gold. Porsche's deeper push into India. Porsche is not simply waiting for the trade deal to lower prices. The company is actively laying the groundwork to capture the anticipated surge in demand. Recognizing that accessibility is about more than just price, Porsche is embarking on a significant expansion of its physical presence across India. The strategy involves moving beyond the traditional metropolitan hubs and establishing a foothold in the nation's rapidly growing Tier 2 cities. Entrepreneurs, professionals, with significant disposable income and a strong aspiration for luxury goods. This expansion plan was made clear at the Bharat Mobility Global Expo 2025. There, Porsche India announced concrete plans to open 3 brand new Porsche centers by the end of the year. Indore, Jaipur, Lucknow, cities that are quickly becoming new centers of wealth and economic activity. This move signals a strategic shift to get closer to potential customers who previously would have had to travel to a major metropolis. Delhi, Mumbai. This recent announcement builds upon an expansion that is already well underway. Porsche has been steadily growing its network, recently opening 2 new modern dealerships, Pune, Hyderabad. These additions have brought the total number of full-service dealerships in India to 10. In addition to the traditional dealerships, the brand also operates a Porsche Studio, a more lifestyle-oriented retail format, further diversifying its touchpoints with customers. This growing network is crucial for providing the high-quality sales and after-sales service experience that luxury car buyers expect, which is essential for building long-term brand loyalty. Section 5. The billion rupee question. Can India be Porsche's salvation? Porsche finds itself at a critical juncture. The catastrophic 98% collapse in its automotive profit, driven largely by its flagging fortunes in China, has exposed deep vulnerabilities in its global strategy. This stark reality has forced the company to look elsewhere for growth, and all eyes are now turning towards the subcontinent. India, with its contrasting story of record sales and burgeoning demand, has emerged as a beacon of hope. The ingredients for a turnaround seem to be in place. The India-EU Free Trade Agreement is the single most important factor, poised to slash the prohibitive import tariffs that have long suppressed the luxury car market. Price reductions of 20 to 30% on models like the 911, Macan, Taycan could unlock a wave of new customers. This is coupled with a strong underlying demand, particularly for Porsche's iconic petrol-powered sports cars, which continue to capture the imagination of Indian enthusiasts. The brand's proactive expansion into new cities further demonstrates a serious commitment to capitalizing on this opportunity. However, a recovery powered by India is far from guaranteed. While the growth is promising, it is important to maintain perspective. The Indian luxury car market is still a fraction of the size of China's. Even with record sales, Porsche sold just over 1,000 cars in India last year, compared to nearly 42,000 in China, even in a bad year. Furthermore, the FTA's benefits are limited by a quota, and increased competition from other European brands, who will also benefit from lower tariffs, will be intense. Porsche cannot simply rely on lower prices to win the market. It must continue to build its brand and service network. This brings us to the ultimate billion-rupee question. Can the nascent boom in India truly compensate for the colossal collapse in China and revive Porsche's global fortunes? Success in India could provide a much-needed financial boost and a new strategic growth narrative for the struggling automaker. It could prove that the brand's allure remains strong in new markets. But failure to capitalize on this chance, or an overestimation of its potential, could leave the company dangerously exposed. Ultimately, India may not be a magic bullet, but it represents the most significant opportunity Porsche has to change its trajectory and begin the long drive back to profitability.